Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the new week will start, today the 18th of the July, and as usual we will discuss the situation on the euro currency. Well, in our weekly thread you could read also the fundamental research, some points that where we discuss the problems with the debt ceiling in the United States, the European Central Bank stress test results, and the potential FOMC policy on in the nearest times. But this is the daily video research, so we will try to discuss the opportunities that market could provide us in the beginning of the week. Well, yesterday, on the previous week, as you remember, we have discussed that probably this was just a retracement on this leg down, and market could re-establish, move and accelerate to the downside. But recent price action give me some suspicions about that perspective, and I suspect that probably this will not happen, because now we could see some clear signs that give us some fears about the continuation to the downside. These signs are not very welcome from the bearish perspective. Although we can see that daily trend is still bearish based on the MACD. What we have, first of all, look at the Friday trading session. This is some kind of highway pattern that tells that market in the indecision. This is not very typical for the continuation of the previous trend. You can see thrust down. If this is the retracement, then the move down should be strong and fast. That is not the sign of the strong continuation of the trend. This is some kind of indecision. Second, I suspect that this was the wash and rinse of these previous highs, and this has happened due to the stop grabber on the weekly time frame that we discussed almost during the whole month. So that has happened, the market take out these lows and fast return back again. Third point, market returns above these lows. This is not very typical if the market really intends to continue move to the downside. I could suggest that probably market could return back to that lows, okay, in that area, and then continue, but returning above that lows, this is not very typical. And the last point, look at this pattern. This is some kind of the morning star, but this is not very important. The structure of the thrust bars. Very often when the market shows some thrust bar to the downside, then fast returns back, this could indicate the shift in the momentum of the market. So if you will read our weekly thread and long-term analysis on the weekly time frame, on the monthly time frame, you will see that in general market behaves not totally quite in a row of the normal bearish environment. So here and there are different signs that point that probably the down move could not happen. Okay, and I think that in the beginning of the week we also should count on some continuation to the more to the upside than to the downside. Now let's take a look at the 4-hour chart. What we see here, this is our pattern ABC. 1618 resistance a bit higher that we discussed in the previous week, and we said that probably market could continue move to the downside. We could see some ABCD pattern, at least new leg after this initial move down. Okay, will it show further development to the downside or not? This we couldn't say that on the previous week, but currently look at this price action. This is not the impulse move, this is not the thrust, this is not the some kind of thrusting to the downside. This is just a retracement move. Look at this, a lot of dojis, high waves, some patterns. This is not the continuation of the down move. It tells us that probably we will see the Gartley 222 pattern, 222 buy pattern, initial thrust, ABCD retracement. And the first area to watch for on Monday is that area of the confluence support 140.50, 140.86. That also includes the weekly pivot point 140.54, sorry, 140.54 for the coming week. Personally, I will watch for that area for the potential, the probable reversal to the upside, because market could show some wash and rinse of that area, some patterns maybe on the 15-minute chart. We'll see the butterfly buy pattern that there or something. Also take a look how market behaves with the trend indicator. This is the MACD predictor. It shows the trend, and when market really shifts the trend, it accelerates under the line. So you can see how it was right here. Shifting trend to the bearish acceleration, shifting trend to the bullish acceleration. This price action doesn't confirm the shift trend to the bearish, although market has shift trend, price action stands. This is the bullish sign. So we can see this is a lot of different bullish sign that tells us that probably market will show some move to the upside. And the nearest target of this move, of course, that area 142.50, 144.70. Or maybe even market will hit the weekly pivot resistance 143.06 on the futures quotes. Well, this will be our first target. Well, potentially market could accelerate further, and weekly time frame that has the much greater Gartner's 222 pattern points on the 152 area. But we will not now discuss this future and long and far targets. Okay, our task here is to prepare for the Monday and Tuesday trading sessions, and our nearest target stands right here. It's 165 target because market has not hit it yet. On the hourly chart, you can see, first of all, look at this. This is excellent example, great example of the Jordan-Napoli railroad track directional pattern. This is the reversal pattern. Okay. Also, it coincides with the wash and rinse. Looking at that pattern, we definitely could say that this was the wash and rinse of the lows on the daily time frame. Just a couple of minutes. Let's see this lows 139.23. This is the dot dash line. It's right here. Look how market behave. Fast move down, clear the stops, taking the stops just below this, and fast return back. So this was just the stop grabber of the stops, and market shows fast return. This is also the bullish sign. Also look at this choppy price action. We can see different ABC patterns. The first larger ABC, A, B, C top, 100% stands 140.04. The shallower, smaller ABC, when there's really thrust move to the downside, has started. A, B, C top, 100 creates precisely an agreement with this confluence support 140.39. So what we could expect? First of all, we could expect, for instance, butterfly buy with the target around this level, and the market just hitting and returns back. Maybe some others reversal patterns, who knows what it will be. Maybe market just flirting with the pivot point and accelerates to the upside. Anyway, that's an area to watch for the potential buy signals. So that being said, current different signals and patterns that are not obvious in general has formed on the market that points on the potential move to the upside. And I now think that I have now more bullish bias than bearish, because recent price action, recent environment tells me that market doesn't show really impulse and thrusting move to the downside. And I think that we should be prepared, we should be aware of the potential move to the upside, and that area to watch for that purpose. But keep in mind that coming couple of weeks will be very important from the point of the fundamental data, basically due to establishment of the debt ceiling in the United States. This could be really doom and gloom on the euro, on the United States dollar pairs. So be careful, and probably currently we should focus on some short-term trades and do not risk much and take our profit fast.